If you are new to the channel, make sure to hit the like button and subscribe, because today we are going to take a deep dive into one of the most unexpected and dramatic transformations in the entire stock market, a company called BitMine Immersion Technologies with the ticker symbol BMNR. This is a story that very few investors saw coming, but it could have major implications for anyone who wants exposure to digital assets, particularly Ethereum. By the end of this video, you will understand exactly what BitMine is doing, why its strategy is unique, what the financials look like, how the stock is being valued, and whether this is an opportunity worth considering in 2025. BitMine Immersion Technologies did not start out as a giant in the digital asset world. Originally, it was a small Bitcoin mining operator using immersion-cooled mining rigs. Immersion cooling is a method where computer hardware is submerged in a liquid that does not conduct electricity, which helps control heat, increase efficiency, and reduce wear and tear on the equipment. For a while, this was seen as a clever way for BitMine to stand out in the crowded mining space. But over time, it became clear that the economics of small-scale Bitcoin mining were becoming unsustainable. Mining difficulty kept rising, energy costs remained volatile, and the industry was dominated by massive players with deeper pockets and cheaper access to power. Instead of slowly being squeezed out, BitMine made a radical pivot that shocked many observers. Rather than trying to compete in mining, the company shifted toward directly holding digital assets, with a particular emphasis on Ethereum. By the middle of 2025, BitMine had accumulated roughly 1.5 million Ethereum tokens. Along with some Bitcoin holdings and cash reserves, the company's total assets added up to more than $6.5 billion. To put this in perspective, that is a larger Ethereum treasury than any other public company in the world, effectively making BitMine the single biggest corporate holder of ETH. This pivot completely changes the way investors need to think about BitMine. It is no longer just a mining company. It is now more like a publicly traded holding company for Ethereum, similar in spirit to how MicroStrategy functions as a proxy for Bitcoin exposure. Investors who want exposure to ETH but do not want to directly buy and custody tokens themselves now have a stock they can buy in a traditional brokerage account that gives them indirect exposure. This is an incredibly important development because it essentially turns BitMine into a quasi-Ethereum trust traded on public markets. Of course, a company's story is only as strong as its numbers, so we need to look carefully at the financials. At present, the income statement still shows negative earnings per share. Revenue from mining operations has declined as the company deliberately moved away from that line of business. Profitability has not yet been achieved because BitMine does not have recurring cash flows like a software company or a manufacturer. Instead, its financial strength rests entirely on its balance sheet and the appreciation of its digital assets. And this is where things get very interesting. At the time of this recording, BitMine's market capitalization sits at only a few $100 million. Yet the assets it holds are worth more than $6.5 billion. That means the stock is trading at a massive discount to its net asset value. Investors are essentially able to buy $1 of Ethereum for just pennies if they purchase the stock. This disconnect is what analysts refer to when they say the stock is deeply undervalued. If BitMine were valued more closely in line with its asset base, the stock price would need to rise several times over. Management has not been shy about signaling its belief that the stock is undervalued. The company recently authorized a $1 billion stock buyback program. That is an extremely aggressive move for a company of this size, but it sends a strong signal of confidence. A buyback program reduces the number of shares outstanding, which increases each shareholder's claim on the underlying assets. In other words, if BitMine follows through, investors who hold the stock would own a larger portion of the Ethereum reserves after the buybacks. At the same time, BitMine also launched an enormous at-the-market equity program worth up to $24.5 billion. That money would be used to buy even more Ethereum. At first glance, those two actions look contradictory. Why would a company simultaneously issue more shares to raise money and then commit to buying back shares? The answer lies in strategy. By raising capital, BitMine can scale its Ethereum treasury and build even greater exposure. By running a buyback program, it can reduce dilution and reward long-term investors. Together, the effect is to maximize Ethereum holdings on the balance sheet while also ensuring that each share represents a significant piece of those holdings. It is a bold and high-risk strategy, but if executed well, it could deliver enormous shareholder value. The focus on Ethereum rather than Bitcoin is also a deliberate choice. While Bitcoin is the largest cryptocurrency by market cap and is often described as digital gold, Ethereum has a very different use case. Ethereum powers decentralized finance, smart contracts, non-fungible tokens, and countless decentralized applications. It has become the backbone of blockchain utility. As the world increasingly builds financial and technological infrastructure on Ethereum, the demand for ETH as a commodity asset rises. BitMine is betting that Ethereum will appreciate dramatically over the coming years as adoption continues. With 1.5 million ETH tokens in its treasury, the upside potential is massive. If Ethereum were to double or triple in value, the company's assets would skyrocket in worth. When we compare BitMine to its peers, there are a few useful analogies. The most obvious is MicroStrategy, the company that has become synonymous with Bitcoin holdings. MicroStrategy has successfully positioned itself as a publicly traded proxy for Bitcoin exposure, and its stock performance has tracked Bitcoin closely. BitMine is attempting to do the same thing for Ethereum. The difference is that MicroStrategy is already a multi-billion-dollar company with a well-established reputation, whereas BitMine is relatively new to the spotlight and still undervalued by most measures. That creates both opportunity and risk. Compared to miners like Marathon Digital or Riot Platforms, BitMine has a simpler strategy. Mining requires expensive equipment, ongoing operational costs, and exposure to energy prices. Miners are also subject to Bitcoin halving events that reduce block rewards. By holding Ethereum directly, BitMine avoids these operational risks. Compared to Coinbase, which operates an exchange and earns transaction fees, BitMine is not generating recurring revenue, but is instead making a concentrated asset bet. The company has effectively chosen a pure play strategy around ETH exposure. From a technical analysis perspective, the stock has been volatile. Prices have traded in wide ranges, reflecting the speculative nature of the business and the correlation to crypto markets. Support levels appear to be in the mid-$40 range, while resistance sits closer to the $70 range. A sustained breakout above those resistance levels could trigger a new bullish trend, especially if Ethereum prices rise simultaneously. Technical indicators like moving averages and momentum signals have pointed toward a bullish short-term setup, though volatility remains high. Options market sentiment provides additional insight. The put-call ratio on BitMine options has hovered around 0.6, suggesting more calls are being purchased relative to puts. This implies that traders are leaning bullish, expecting upside movement. Implied volatility is elevated, meaning the options market is pricing in significant swings ahead. This is consistent with a stock tied closely to cryptocurrency markets, where double-digit moves in a single week are not unusual. Of course, no investment is without risks, and with BitMine, those risks are substantial. The first and most obvious is that the company's entire value proposition rests on Ethereum. If Ethereum prices were to fall sharply, or if adoption slowed, BitMine's asset base would contract and investor sentiment would sour. Regulatory risk is another major factor. Governments around the world are still deciding how to regulate cryptocurrencies, and any new restrictions could impact valuations or limit BitMine's ability to operate freely. There is also financial execution risk. Issuing $24.5 billion worth of new shares to buy Ethereum could be highly dilutive if not managed carefully. Even with a buyback program, shareholders could see their ownership diluted if the balance between issuance and repurchases is not handled properly. Additionally, while the company currently holds billions in assets, it does not generate traditional revenue streams. That means it is more like a holding vehicle than a cash flow producing business. For some investors, that is a red flag, as it means there is no underlying operating business to support the valuation beyond the crypto holdings. Despite these risks, the opportunities are equally large. If Ethereum continues to gain traction as the foundation of decentralized applications, its price could appreciate significantly. BitMine would then see the value of its holdings multiply. With its stock currently trading at a fraction of the value of those holdings, the potential upside is enormous. If the gap between market capitalization and net asset value narrows, shareholders could see multi-bagger returns. Looking ahead, there are a few potential scenarios. In a bearish case, Ethereum prices stagnate or decline, regulatory pressures increase, and BitMine struggles to maintain investor interest. In that situation, the stock could drift lower and remain disconnected from asset value. In a base case, Ethereum grows steadily, BitMine manages its capital strategy effectively, and investor awareness improves. That would gradually close the discount to net asset value and drive moderate gains. In a bullish case, Ethereum enters a new growth cycle, doubling or tripling in value, while BitMine executes its buybacks and expansion flawlessly. In that scenario, the stock could see exponential upside, potentially rivaling the performance MicroStrategy delivered during the Bitcoin bull run. So what is the bottom line on BitMine Immersion Technologies? This is not a conservative investment. It is highly speculative, tied directly to the price of Ethereum, and subject to regulatory, financial, and market risks. But it also represents one of the most asymmetric opportunities in the market today. For investors who believe in Ethereum's long-term growth, BMNR offers a way to gain exposure through traditional equity markets while trading at a steep discount to the value of its holdings. That kind of setup does not come along very often. My personal outlook is cautiously bullish. For investors with a high tolerance for risk and a multi-year time horizon, BitMine represents a compelling buy opportunity. The company has repositioned itself brilliantly. It holds more Ethereum than any other public company, and it is actively using aggressive capital strategies to unlock shareholder value. The discount between its market cap and its assets is too large to ignore. While volatility is guaranteed and risks are real, the potential rewards could be extraordinary if Ethereum performs as many analysts expect. Thank you for watching this deep dive analysis on BitMine Immersion Technologies. If you found this breakdown helpful, make sure to like the video and subscribe to the channel for more long-form stock and crypto investment analyses every week.